The world of finance is absolutely drowning in data. You've got news feeds updating every second, market numbers flashing, these detailed fundamental reports dropping.
Yeah, it's just a tidal wave. And for anyone or any system trying to make sense of it all for better trading decisions, it's overwhelming.
And traditional models, even some of the early financial LLMs, they really struggle to pull together useful insights from all that messy, diverse data, right?
That's exactly. How do you actually weigh a news headline against, say, a subtle shift in trading volume and a long-term earnings trend all at the same time? It's tough.
It really is. That synthesis across different data types, that's the killer challenge. And that's really the core of the paper we're looking at today. TradExpert, revolutionizing trading with mixture of expert LLMs.
Right, and their big idea is this mixture of experts framework. Think of it like a specialized team.
Yeah.
You've got one expert focused only on news, another just watches the market, data prices, volume. A third digs into those complex quant factors, the alphas, and a fourth looks at company fundamentals, earnings calls, that sort of thing.
So like specialists.
Precisely. Each is a master of their little domain. Then you have a lead strategist, the General Expert LLM in this case.
Gotcha.
It takes the findings from all these specialists and synthesizes them to make the final call, predict if a stock goes up or down, or rank the best stocks to buy.
And the key result, did it work?
Oh yeah, it worked extremely well. TradExpert didn't just edge out the competition, it significantly outperformed state-of-the-art baselines, both in predicting stock movements and, maybe more importantly, in simulated trading.
Wow.
We're talking really exceptional annualized returns, great Sharpe A ratios, meaning good risk-adjusted returns, but also with lower volatility and smaller drawdowns. That's a big deal.
So high return, lower risk, that's kind of the dream.
Pretty much.
Okay, so whether you're deep in AI research, maybe building ML systems, or just fascinated by how these advanced LLMs can tackle really complex, high-stakes problems, this research shows a powerful way forward.
It's about applying these sophisticated architectures, like MOE, to really integrate diverse information. It's a great case study.
So let's dive in properly. Welcome back, everyone. Our goal today is to really unpack this TradExpert paper. We want to understand the pieces, see how it tackles that big synthesis challenge, and figure out why it seems to be so effective.
Yeah, especially for a technical audience, this connects the dots between cutting-edge LLMs and a really complex domain like quant trading. It's fascinating stuff.
So historically, quant finance, it relied heavily on mathematical models, right?
Yeah.
Mostly using structured numerical data.
Exactly. Historical prices, trading volumes, that kind of thing. And those models are great at finding patterns in numbers.
But they kind of hit a wall with unstructured data, like news articles or earnings call transcripts.
Yeah, integrating that stuff usually meant a lot of manual work, feature engineering, sentiment analysis maybe. It wasn't seamless. It was clunky.
Then came LLMs. First, people tried using general ones like GPT or Llama, maybe fine-tune them a bit on finance text.
Right. And then we saw specialized models emerge, things like Finbert, Bloomberg GPT, FinGPT, trained specifically on huge amounts of financial data.
And those were better at understanding the language.
Definitely improved text understanding. But they often still focused mainly on text, or struggle to really deeply integrate that text with all the structured numerical data, the prices, the indicators.
And that's the specific gap TradExpert tries to fill. The paper really hammers this point. How do you truly synthesize insights from all these different sources? News, prices, quant factors, fundamentals, text and numbers together.
And their answer is this mixture of experts framework. It's designed from the ground up for this multimodal, multi-source problem, divide and conquer, basically.
Okay, let's get into that architecture. You mentioned the MOE concept, multiple specialists working together. How does TradExpert structure that?
So it's that team analogy again, 4 specialized expert LLMs. Each gets its own specific data type.
Okay, walk us through the team members. Who's first?
First up, the news analyst. Its job is simple. Read and understand news articles about stocks. Pure text analysis.
Makes sense. What about the market numbers, the price action?
That's the market analyst. This one handles the historical OHLCV data: open, high, low, close, volume, the time series stuff.
Got it.
Yeah.
News, prices. What else? You mentioned quant factors?
Yep, that's the alpha expert. It deals with those quantitative alpha factors, those complex mathematical signals traders use to find potential edges.
Okay. And the fourth specialist?
That's the fundamental analyst. This one takes the longer view, looking at company health. It analyzes earnings call transcripts, core financial metrics, things like that.
So 4 experts, each crunching their own data. How does the system bring it all together for a decision?
That's where the General Expert LLM comes in. It takes the reports, the insights from each of those four specialists.
And synthesizes them.
Exactly. It merges those different viewpoints to make the final prediction or the final ranking of stocks.
And what's the underlying tech? Are these brand new models?
No, they built on a solid foundation. All the experts, including the general one, use the LMA27B model as their base. And then they used supervised fine-tuning, or SFT, with LoRa low-rank adaptation. That's a pretty common and efficient technique now for adapting these big pre-trained models to specific tasks without having to retrain everything from scratch. Saves a lot of compute.
Right. LoRa makes fine-tuning more accessible. Okay, so they have this cool modular architecture. What about the data they used to train and test it? Must have needed a lot.
They did. They put together a really comprehensive data set. It covers 4 full years, 2020 through 2023, focusing on stocks in the S&P 500 index.
4 years? S&P 500, that's pretty solid. What kinds of data were in there?
It mirrored the experts. They had news data over 500,000 articles, market data almost 500,000 daily OHLCV records, alpha factors 108 different technical indicators, and fundamental data, including earnings call transcripts from Seeking Alpha and other key metrics.
Wow, that's diverse. How did they split it for training versus testing? This is crucial in finance.
Absolutely crucial. They used a strict chronological split. Training was Jan 2020 to mid 2022. Validation was the second half of 2022. And the all-important test set was the entire year of 2023.
Good. Look into the future, right?
Exactly. No time travel allowed. That ensures the evaluation is realistic.
Okay, architecture, data. What tasks did they actually use to see how well TradExpert performed?
2 main tasks. First, task 1, stock movement prediction. Pretty straightforward. Given all the data up to today, predict if the stock price will rise or fall tomorrow. Binary classification.
Okay, a direct prediction. What was task 2?
Task 2, stock trading simulation. This is more like a real-world test. They simulated a trading strategy, specifically buy and hold over the 2023 test period.
I don't know that word.
Each day, TradExpert would rank the stocks based on its analysis. The simulation would then buy and hold the top K highest-ranked stocks. This tests how profitable the framework is in a simulated market, considering risk too.
All right, that tests the practical application. Okay, now let's get into the nitty-gritty. How does each expert actually process its specific data type using that Llama backbone? This seems like the secret sauce.
It really is. They use some clever methods. Let's start with the news analyst.
The text reader.
Right. It gets fed news articles for a specific stock. They fine-tuned it using prompts, basically saying, here's the news, predict the movement. But importantly, it doesn't just output rise or fall.
Ah, it explains itself.
Yeah, it uses chain of thought to generate detailed reasoning for its prediction. And here's a neat trick. For the fine-tuning, they actually used GPT-4 to generate the ground truth reasoning.
No.
They gave GPT-4 the news and the actual outcome, what the stock did next day, and had it explain why that outcome likely happened based on the news. That created high-quality reasoning examples for training their news analysts.
Using a bigger model to bootstrap the training data for reasoning that's smart.
Okay, what about the market analyst? Handling numbers, time series data, that's usually tricky for LLMs. It is a core challenge. Time series are continuous numbers, LLMs like discrete tokens. Their solution was something they call a reprogramming mechanism.
Reprogramming?
Think of it like teaching the LLM a new way to see patterns in the OHLCV data. They transform the numerical time series into a representation that aligns better with the LLM's internal structure. It's kind of like creating a special text prototype or embedding from the numbers.
So translating the wiggles on a price chart into LLM speak.
Kind of, yeah. It involves techniques like patching the series and using multi-head cross-attention. Plus, they also give the LLM a standard text summary of statistical features from the time series using a library called TS-Fresh to describe things like trends or volatility.
So it gets the raw pattern and a statistical summary.
Exactly. The market analyst uses both to make its rise-fall prediction.
That reprogramming sounds really interesting for bridging the gap between numbers and language models. What about the alpha expert with those quant factors?
Right. The alpha expert deals with those complex formula-based signals. Here again, they leveraged GPT-4 during preparation. GPT-4 was used to generate natural language descriptions of what each complex alpha factor actually means conceptually.
So the LLM doesn't just see a formula ID, it understands the trading idea behind it.
That's the goal. For each stock, each day, they calculate all 108 alpha values. Then they use a simpler model, late UBM, to score these alphas and pick the top K most relevant ones for that day.
Okay.
The prompt for the alpha expert then includes the GPT-4 generated descriptions and the calculated numerical values for those top K alphas. Based on that mix, it predicts rise or fall.
Combining the what it means with the what's the number. Clever. Last one. The fundamental analyst.
This one's a bit different because fundamentals change slower quarterly, usually. It looks at earnings call transcripts and key metrics.
So it predicts quarterly.
Yep. Its task is to predict performance over the next quarter, not just the next day, and it uses a 5-point scale. Strong rise, no change, moderate fall, strong fall. Like the news analyst, it also provides detailed reasoning using chain of thought.
Okay, so we have these 4 experts, each producing a prediction and maybe reasoning. How does the general expert pull this symphony together?
Good question. The general expert gets reports from all 4 specialists, but these reports could be quite long, right? Especially the reasoning parts.
Yeah, context windows are still a thing.
Exactly. So the first step is summarization. The general expert condenses the key findings from each specialist report into a concise summary. That makes it manageable.
That's the key takeaways. And then it has 2 modes of operation.
Right. Prediction mode is for task 1. It takes the summarized reports from the experts and makes the final prediction. Rise or fall for the next day. Simple enough.
And the second mode, for the trading simulation.
That's ranking mode. Here, the general expert acts as a comparator. You give it the summarized reports for 2 different stocks, say stock A and stock B.
And ask it which one looks better.
Precisely. It determines which of the 2 stocks is likely to perform better in the near future based on the combined expert insights.
So it does pairwise comparisons, A vs B, A vs C, B vs C.
Exactly like that. This pairwise comparison is the foundation for creating the daily ranked list of stocks for the trading simulation. They use what they call a relaxed comparison-based sorting algorithm.
Relaxed comparison-based sorting. Sounds gentle. How does it work?
It's actually pretty intensive computationally. It's similar to bubble sort in a way. To rank N stocks, the general expert compares every single possible pair. That's N times N1, 2 comparisons, which is ON2.
ON2. Whoa, okay. That's much slower than something like quicksort, which is typically ON log GN, or even a specialized top K sort. Why go with the brute force N squared approach?
That's a really critical point, and they studied this directly. They found that using an LLM as a comparator isn't perfectly logical or consistent.
How so?
It can be non-transitive. The LLM might say stock A is better than stock B and stock B is better than stock C, but then turn around and say stock C is better than stock A.
Ah, like rock, paper, scissors. The LLM gets confused.
Sort of. Because of this potential non-transitivity, just doing the minimum number of comparisons needed for a theoretically faster sort like quicksort can lead to errors or unstable rankings.
Okay.
By doing all the ON2 pairwise comparisons, you get a much more robust signal. You count the total wins for each stock across all its comparisons. Sorting by these win counts tends to smooth out the inconsistencies and gives a more accurate final ranking, despite the higher computational cost. Their ablation study actually proved this empirically.
That's fascinating. So sometimes the theoretically slower algorithm is practically better when dealing with fuzzy LLM comparisons. A great practical insight. Okay, let's talk results. Did TradExpert deliver in the experiments?
It really did. Let's start with stock movement prediction, task 1. They used standard metrics, accuracy, but also Matthews correlation coefficient, or MCC.
MCC is good for imbalanced classes, like stock movements often are, right?
Exactly. They tested a version using just news and market data called TradExpert-M against lots of baselines, hybrid models, other LLMs like GPT-4 and Gemini, specialized financial models.
Yeah.
TradExpert-NM consistently came out on top, especially on their own S&P 500 dataset. Table 2 shows the numbers. They suggest it might be because their dataset had longer, richer news articles compared to some benchmarks that use shorter texts, like tweets.
Beating strong baselines like GPT-4 on prediction, even with just 2 experts, is impressive. But the trading simulation, task 2, that's the big one for practical value.
Agreed. For the stock trading simulation, they back-tested on the Dow30 Stocks, a subset to manage costs over the full year of 2023. They used standard portfolio metrics, annualized return, AR, Sharpe ratio, SR for risk-adjusted return, annualized volatility, AV for risk, and maximum drawdown, MD, for the worst peak-to-trough log.
And compared against
Traditional quant models like SVM and XGBoost, various deep learning trading agents, A2C, PPO, Deep Trader, and the Dow Jones Industrial Average, DJI Index, as a benchmark.
Okay, the moment of truth. How did TradExpert do? Table 3, figure 6 in the paper.
The results were honestly striking. TradExpert just blew the baselines away across the board.
Give us the highlights, the numbers.
Okay. TradExpert achieved an annualized return of 49.79%. The best deep learning baseline hit 32.45%, and the DJI index was only 13.70% for that period.
Wow, nearly 50% AR. But was it super risky?
That's the amazing part. No, its annualized volatility was just 9.95%. The baselines were way higher, around 17-20%, and even the DJI was higher at 11.41%. And the maximum drawdown was tiny, only 6.56%. Baselines were down 15-20% at their worst points.
So much higher returns with significantly lower risk. That's got to mean a huge Sharpe ratio.
Exactly. TradExpert's Sharpe ratio was 5.01. That's exceptional. A Sharpe over 1 is considered good, over 2 is very good, over 3 is excellent, 5.01 is phenomenal. The best baseline was 1.82.
Incredible. And the chart, figure 6, probably shows it just climbing steadily.
Pretty much. The cumulative return line for TradExpert just consistently diverges upwards from all the others throughout 2023. It's very strong evidence for the power of their MOE synthesis approach.
Those results really do speak for themselves.
Yeah.
Okay, digging a bit deeper, the Ablation Studies help us understand why it works so well. What did they learn about how much each expert contributed?
They did an Impacts of Experts study, Table 4. They basically ran the trading simulation repeatedly, each time removing one of the 4 experts.
What did they find?
They found that the market analyst, prices, and the news analyst were the most critical for daily trading. Removing either of those caused the biggest hit to returns and Sharpe ratio, and the biggest jump in volatility and drawdown.
Makes sense. News and price action are key short-term drivers.
Right. The alpha expert had less impact, and the fundamental analyst had the least impact on these daily trading metrics. Though the authors speculate it might add value over longer horizons or improve stability, but the main takeaway was that all experts contributed uniquely. Performance was best when the full team was active.
So the synergy really matters.
Yeah.
What about handling the structured data, like the prices and alphas?
Yeah.
Did they validate that their methods worked?
Yes. In the Effectiveness of Structured Data Reasoning study, Table 5, they compared TradExpert using just the market and alpha experts against a more traditional quant method for combining alpha signals. They used metrics specific to ranking quality, like rankith.
Right.
TradExpert MA significantly outperformed the traditional alpha combination method. This supports the idea that their techniques, like the reprogramming for time series and the way they handled alpha factors, are genuinely effective at letting LLMs reason about structured data, maybe even better than some established methods.
So LLMs plus clever engineering can beat traditional quant on its home turf. Interesting.
Yeah.
And we already discussed the ranking algorithm choice.
Right, the ON2 sorting, Table 6. Just to reiterate, that Ablation confirmed that doing all the pairwise comparisons, despite being computationally heavier, resulted in better, more accurate stock rankings because it mitigated the LLM comparator's non-transitivity issues. Practice over theory in this case.
Those ablations really add confidence to the results, showing the value of each component and justifying the design choices. Okay, given this stellar performance, what are the downsides? What are the limitations here?
The main one they call out is processing time. Getting all those experts to run, doing the summaries, the comparisons, it takes time. On their A5000 GPU setup, it took about 4.7 seconds per stock on average.
4.7 seconds per stock.
Okay.
Okay, so for daily trading, maybe ranking a few hundred stocks, that's feasible.
Probably manageable, yeah. It adds up, but it's likely doable within a day. But it definitely rules out high-frequency trading.
Right. No chance of using this for HFT strategies that need millisecond or microsecond decisions.
Exactly. The current latency is just too high for that. It's built for lower frequency decisions daily, maybe intraday at the minute level, but not HFT.
Fair enough. What are the authors thinking about for future work?
2 main directions mentioned. One is exploring ways to potentially adapt or optimize it for high-frequency trading, tackling that latency issue. The other is expanding its application to global markets, going beyond the US S&P 500.
Makes sense. Extending the reach and speeding it up. Okay, so let's try to wrap this up. We've gone through TradExpert, the challenge of synthesizing diverse financial data. It's really neat mixture of experts architecture, the clever ways it gets LLMs to handle different data types like time series and alphas. It's truly impressive state-of-the-art results in prediction, especially trading simulation, and the insights from the Ablation Studies backing it all up.
Yeah, the key takeaway really is how this MOE framework, using specialized LLMs coordinated by a general one, provides a powerful way to integrate and reason over all that messy, multimodal financial data text, numbers, signals, fundamentals, leading to significantly better performance.
And for the technical folks listening, it's a fantastic example of applying these complex LLM architectures and smart data integration techniques to a really hard, real-world problem. It shows you don't always just need one giant model. Structuring the intelligence can be really effective.
Definitely. It really pushes the envelope on using LLMs for more than just language, getting them to reason effectively over diverse data types in a complex system.
Which brings us to our final provocative thought for you. If this mixture of experts approach specialized analysis feeding into general synthesis works so well for the chaotic, noisy, multimodal world of finance, what other complex systems could benefit massively from this same pattern?
That's a great question. You could imagine it in complex medical diagnosis, right? One expert for imaging data, one for lab results, one for patient notes, one for genomic data, all feeding a general diagnostician LLM.
Or maybe optimizing something like global supply chains, factoring in logistics data, real-time news about disruptions, weather patterns, economic indicators.
Exactly. Any domain where the best decisions require pulling together insights from fundamentally different kinds of information, where each type of information needs its own specialized analysis before you can see the big picture.
It feels like this structured approach to AI reasoning could unlock progress in a lot of really intricate fields. Maybe it's a key architectural pattern for tackling complexity. Lots to think about there.